We have a significant amount of that through Berkshire, but by far the largest amount is related to the Precision acquisition. So whatever you see, you can add about 400 million. That, in my view, is not an economic expense, but the accountants would argue otherwise. But it's our money, so we'll take my view. Mark Donegan, who runs that operation, is incredible. And he has been not only, he's a fabulous manager. I wouldn't have bought it without him in charge. He also has been very helpful to us in other areas. And he loves to do it. So you can't beat him, both as a manager in his own operation, but with his devotion to really doing everything that will help Berkshire. It's a very good acquisition with very long tails to the products that are being developed. Charlie?
Well, yeah, I think we'd buy another one just like it tomorrow if we had the chance.
Yeah, that's the answer. Man, a few words, but he gets the point. Okay, now we will go to the shareholder in Station 1. I believe that's probably up here to my right.
Hello, this is Xiao from Wuxi, China, Starwood Capital. And being in the meeting for 12 years, wish you and Charlie good health, so we could see you both run the meeting for 12 more years.
Thank you.
Quick question. We know both you and China delegations, US and China delegations are in China for intense discussion on so-called trade war. Let's go one step beyond the trade war. Do you think there's a win-win situation for both countries, or the world is just too small for both to win, and we have to revisit your 1942 chart again? Thank you.
Thank you. I'd like to just mention one thing. In August, I'm going to be 88, and that will be the 8th month of the year, and it's in a year that ends with an 8, and as you and I both know, 8 is a very lucky number in China. So if you find anything over there for me, this is the time we should be acquiring something. All those 8s.
Will do.
The United States and China are going to be the two superpowers of the world, economically and in other ways, for a long time. We have a lot of common interests, and like any two big economic entities, there are times when there'll be tensions, but it is a win-win situation when the world trades, basically, and China and the U.S. are the two big factors in that. But there's plenty of other citizens of the world that are involved in how this comes out. And there's no question, and the nice thing about it in this country, I think, is that both Democrats and Republicans basically, on balance, believe in the benefits of free trade. And we will have disagreements with each other. We'll have disagreements with other countries on trade, but it's just too big and too obvious for that the benefits are huge, and the world's dependent on it in a major way for its progress. That two intelligent countries will do something extremely foolish. We both may do things that are mildly foolish from time to time, and there is some give and take obviously involved. But U.S. exports in 1970 and U.S. imports in 1970 were both about 5% of GDP. So here we were selling 5% of our GDP and buying up 5% of our GDP, basically. Now, people think we don't export a lot of things. Our exports are 11 and a fraction percent of GDP. They've more than doubled as a share of this rising GDP. But the imports are about 14.5%. So there's a gap of 3% or thereabouts. And I would not like that gap to get too wide. But when you think about it, it's really not the worst thing in the world to have somebody send you a lot of goods that you want and hand them little pieces of paper. I mean, because the balancing item is if you have a surplus or a deficit in your trade, you're going to have a surplus in investment, and so the world is getting more claim checks on the United States, and they to some extent they buy our government securities, they can buy businesses, and over time you don't want the gap to get to be too wide because the amount of claim checks you were giving out to the rest of the world could get a little unpleasant under some circumstances. But we've done remarkably well with trade. China's done remarkably well with trade. The countries of the world have done remarkably well with the trade. So it is a win-win situation, and the only problem gets to be when one side or the other may want to win a little bit too much, and then you have a certain amount of tension. But we will not sacrifice the world. I mean, we'll not sacrifice world prosperity based on differences that arise in trade. Charlie?
Yeah, well, I think that both countries have been advancing, and of course China is advancing faster economically because it started from a lower base, and they've had a little more virtue than practically anybody else in the world in having a high savings rate. And of course, a country that was mired in poverty for a long, long time and that assimilates the advanced technology of the world and has a big savings rate is going to advance faster than some very mature company like Britain or the United States. And that's what's happened. But I think we're getting along fine, and I'm very optimistic that both nations will be smart enough to realize that the last thing they should do is have any ill will for the other.
Okay, Becky, quick.
This question comes from Kirk Thompson. He says, Warren, in this year's annual letter to shareholders, you referenced both cheap debt and a willingness by other companies to leverage themselves as competitive examples as to why it's hard to get more acquisition deals done. It seems like the trust and prestige of doing a deal with Warren Buffett and Charlie Munger allow Berkshire to get a hometown discount and beat out other firms that might pay a little more to a prospective seller. Have you given thought to having other Berkshire managers have more public exposure so future generations of successful business owners continue to bring deal opportunities to Berkshire like they have in prior decades?
Yeah, that sort of reminds me of, who was it? Tony O'Reilly remarked one time about the responsibility of a CEO that the very first job of the CEO was to search through his organization and find that person who had the initiative and the brains, the determination, all of the qualities to be his logical successor, and then fire the guy. There's no question. I think the reputation of Berkshire as being a very good home for companies, particularly private companies, but a good home for companies. I don't think that reputation is dependent on me or Charlie. It may take a little, there'll be a little testing period for whoever takes over in that respect. But, basically, we've got the money to do the deals. We'll have the money to do the deals subsequently. People can see how our subsidiaries operate in the future. And the truth is that I think some of the other executives are getting better known. But there will be I'll tell you this, if things get bad enough, you don't have to worry. They'll be calling us no matter what. So I do not worry about the so-called deal flow, which is a term I hate. But I don't think I think that's dependent on Berkshire and not dependent on me. And, as I've mentioned, my phone isn't ringing off the hook with good deals. So that apparently this big winning personality or something is not delivering for you. So it may be the next person will be even more, get even more calls. Berkshire, the reputation belongs to Berkshire now, and we are, for somebody that cares about a business that they and their parents and maybe their grandparents lovingly built over decades, if they care about where that business ends up being after, for one reason or another, they don't want to keep it or can't keep it in the family, we absolutely are the first call, and we will continue to be the first call, whether Charlie or I answer the phone or somebody else does. Charlie?
Well, a lot of the subsidiaries have for a long time already been making all kinds of acquisitions with people they know and we don't. So it's already happening. And in fact, it's happening more there than it is at headquarters. So
Don't tell them, Charlie.
you're getting your wish. And it is weird that about 99% of the public companies that change hands in terms of control change hands in a sort of auction presided over by an investment banker. And the people that buy are usually just leverage it to the gills, and then if it starts doing a little better, they re-leverage it. And that money is coming out of the charitable endowments and pension plans who are making these highly leveraged investments in all these companies changing hands at very high prices. Sooner or later, this is not going to work perfectly.
Yeah.
And it's going to have an unpleasant episode. And I think we'll be around and in good shape at that time.
There was one fellow who came to me many years ago, and he had a wonderful business. And he had been worried because he had seen a friend of his die, and the problems that arose later when the managers, to some extent, tried to take advantage of the widow, and it became a disaster. So he said he thought about it a lot the previous year, and he decided he didn't want to sell the business to a competitor who would be a logical buyer, because they would fire all of his people, and the CFO that would remain, and all up and down the line, they'd all be the acquirers people. He didn't want to do that to his people.